Coming up on the program today, Mozambique gets $160 million budget support as EU resumes aid. UK, Germany and Ethiopia set up $6.5 million fund to save 2.5 million jobs. Plus, global stock markets rise ahead of US presidential election. Hello and welcome. This is Business Incorporated on Channels Television. I'm Chimeze Obi Iwabu. Let's get the show started with the intraday market numbers here on the African continent, which were positive, except the NSE here in Nigeria, which sustained the bearish sentiment seen on Monday. On the flip side, South Africa's JSE index jumped 1.54%, while the EGX30 in Egypt added 0.53%. Kenya closed positive on Monday. And investors' sentiments in the Middle East were mixed at intraday. In the UAE, Dubai's main index shaved off 1.18%, while the Abu Dhabi index was higher by 0.25%. Elsewhere in the region, the Qatari index advanced 0.64%, while Saudi Arabia's index lost 0.12%. Let's cross over now to Europe, where stocks opened higher today ahead of the U.S. presidential election between incumbent President Donald Trump and former Vice President Joe Biden. For more, let's hear from Conrad. Hello, Conrad. Good afternoon.
Good afternoon, Chibi. Good to be back.
Good to have you. Well, the U.S. election is the main topic of discussion on the financial markets, but the usual business of earnings reports has not stopped. Which companies today are worth talking about?
Well, Bayer, in particular here in Germany, is of course worth mentioning, as Bayer is a German company. The chemicals group has managed to settle more of its Roundup or glyphosate cases in the United States. You know, Roundup or glyphosate is the name of that weed killer where many people in the United States sued because they alleged that this product causes cancer. Now, more settlements is, of course, a positive development for Bayer, but those settlements also have become much more expensive than originally planned, and this weighs negatively on the earnings in the third quarter of Bayer. Bayer, by the way, is also one of the companies getting to feel very strongly and very negatively the worldwide corona recession. On the other hand, Mondelez, the cookies company and chocolate maker, this is a business that has profited from the fact that due to corona in recent months, many people have preferred to stay at home and munch away on sweet stuff. And another company profiting from corona is PayPal, the payments operator, which of course has profited from the shift to online. Many of those online business transactions are paid for via PayPal. So generally speaking, it can be said that investors continue to play the picking game: who profits from corona and who does not.
And the negotiations about the Brexit deal continue this week. But until there is a deal, businesses have to prepare for the worst. What is a Brexit without a deal? What's the current situation in the banking sector?
Well, of course, many banks or financial firms that previously used London as their gateway to the European Union are now setting up shop in Germany. Germany's Bundesbank, which is our national reserve bank, says so far 64 banks or other financial firms have applied to expand operations here in Germany or move to Germany completely. And they're bringing with them billions of euros. Up until now, Bundesbank says banks have transferred 278 billion euros from the UK to Germany. Until the beginning of this year, this amount is expected to rise to 675 billion euros. The pandemic is also playing a role in this, transfer process from the UK to the continent. Banks find it not easy to recruit people. These are positions that the Bundesbank thinks should be transferred to Germany or to the continent because they are in risk management, for example. But the banks say they don't find it easy to recruit people so quickly. So for a certain amount of time, those bankers will be allowed to continue to work from their home offices or from their homes in London, but not for very long. Bundesbank makes it pretty clear that it wants control over those bankers.
New corona lockdowns. Germany's public finances watchdog is warning the corona rescue plans might be unconstitutional. How much of a risk is this for Angela Merkel's policymaking?
Excuse me for that coughing. Well, the government declared an immediately case of emergency because of the corona, which allowed the constitutional debt limit to be ignored for the moment. Of course, the question is, how long will this work for this government? Angela Merkel herself will not have to deal with the consequences. She will give up her job as Chancellor next year when we have a new general election. But of course, the longer the crisis goes and the more the government taps investors for new debt, the louder this discussion will become, and it is one discussion that might play a very negative role also for the financial markets during the next year. The question, how constitutional is it that Germany has taken on so many new debt due to the corona crisis?
Well, Conrad, all eyes on the U.S. Let's continue to watch and see what happens eventually. Enjoy the rest of the day. While there's only one issue dominating the markets today, the U.S. election, even the COVID-19 pandemic seems to be taking a back seat as the world watches to see who wins the White House. Let's know how that is playing out in the UK. Let's talk to Juliana. Hello, Juliana. Good afternoon. Well, global markets are bracing for the U.S. election. How are the markets in London pricing in the possibilities of the outcome? Are you seeing a blue wave or red?
Goodness, well, it's the calm before the storm. I've got to say all the British media, Chimeze, are all jam-packed in Washington, Pennsylvania, Florida. There's hardly any journalists left in London at the moment besides myself. But is it a red wave or a blue wave? Clearly, it's a blue wave. That's what all of the national polls are suggesting. All the big polls are suggesting that Joe Biden, the former US Senator, former Vice President, will have a clean victory. But of course, history tells us that you cannot rule out a Trump victory. It is all to play for, and I think it is too close to call. It's a delicate balance, really. He's either going to get a landslide victory or it's going to be too close to call. So this time tomorrow, we're either going to know who the winner is or it could roll on and on and on if Donald Trump does stick to his guns and decides to take it to court and stop the in-mail voting, which I believe has surpassed 100 million votes. In London, there are triple-digit gains on the FTSE at intraday, and I think this does reflect the fact that they are taking these polls seriously, and they do believe that Biden may indeed win the US presidential election. If he does win, then in Europe, of course, it may appear to be that trade and policy could run a lot smoother, which is why I think European markets are pricing in a Joe Biden win. But if we bring it more domestically here in Britain, we know that Boris Johnson is very, very chummy with US President Donald Trump. Some have called him his younger brother. Certainly, some people think they look quite similar. And we do know that if there isn't a deal striked between London and Brussels, then Joe Biden is going to come down pretty tough on Boris Johnson. But it's all to play for. And of course, I, as well as many of our viewers, will be watching it very, very closely. So having a look at the numbers, the FTSE All-Share is up 1.64%. The FTSE 100 is up by 1.75%. And the FTSE 250, that domestic market, up by 1.32%. In currencies, the British pound also up on the US dollar by 0.62%, up on the euro by 0.14%, and up on the Japanese yen by 0.60%. Jimmy.
Well, Juliana, we can only wait and see what happens eventually. In the meantime, the Treasury is extending its emergency business loan scheme and will allow firms to top up their borrowing as part of new rules meant to keep businesses afloat during England's second lockdown. How is that being received?
Well, you know, it depends on who you talk to, really. I suppose for some people this is a great relief. For some people it's just not enough. So these are the bounce back loans and the big corporate coronavirus loans. Many of them were due to expire at the end of October. But of course, because of this new lockdown that begins on midnight on Thursday, so many of these companies have been given an extension. The furlough scheme, which we've spoken about extensively on this programme, that will be extended. It had been reduced to about 60%, I believe. That's now gone up to 80%. You'll be able to get that in the month of November. For the self-employed, they too will be able to receive about the same money that those in full-time employment will be receiving. But there are about 2.9 million people, according to the National Audit Office, that don't fall into either category, that have really been suffering. So there's a lot of urgency and pressure being piled on the government by the opposition Labour Party and unions, asking for the government to do more. I believe that mortgage holidays and loans holidays have been extended so that anybody who is in need that can't afford to pay their bills because of this looming lockdown, you will be able to apply for extension. So the government believe that they're doing enough. But again, you know, if you're somebody that's on the brink and your business is likely to collapse, then clearly this money is just not enough.
On the corporate scene, subprime lender Amigo has paused new loans until 2021. What reasons are they given for this?
Well, it's an interesting story, actually. Amigo Loans, they've been struggling for quite some time now. Very controversial lender here in the UK. They typically lend to people who are considered poor, less privileged, or people that have very bad credit, and they loan to you if you have a guarantee from a friend or family member. A couple of months ago, I believe earlier this year, late last year, the Financial Conduct Authority, the financial regulator here, they were looking into whether or not Amigo Loans were ticking all the boxes when it came to giving people loans that could potentially affect them even more. And they found that they hadn't. They were overwhelmed with over 20,000 different complaints where people decided to try and gain compensation from them. They have been given back compensation. I believe they've given back compensation to the tune of £50 million. That was supposed to run out at the end of October. They're still overwhelmed. They've still got thousands of complaints to go through, which means they've decided that they cannot actually operate as a company properly until the end of next year. As soon as they made that announcement, their shares crashed by 27%. But in this country, especially over the past couple of years, I think regulators have really done their hardest to try and clamp down on what they consider to be scrupulous loan companies that really kind of prey on individuals who are desperate for money. And they get the money, but then, of course, it's paying that back, which takes them time and time again. And Amigo Loans is just one of many of them that have been doing this.
Well, Gilena, US election, US election, US election. We'll talk more tomorrow. Enjoy the rest of the day.
Okay.
And stocks in Asia Pacific were higher today as the Reserve Bank of Australia lowered its cash rate target. Hong Kong's Hang Seng Index jumped around 2% in the morning trading. Mainland Chinese stocks were also higher, with the Shanghai Composite gaining 1.13%, while the Shenzhen Component adding 0.89%. South Korea's Kospi also added 1.7%. In Australia, the S&P ASX 200 gained more than 2%. MSCI's broadest index of Asia-Pacific shares outside Japan traded 1.12%. Japan markets are closed for a holiday on Tuesday. We'll take a break, and when we come back, we'll look at all the stories on the African continent. Do stay with us. We'll start off this segment from the commodities space as oil prices held steady this morning ahead of the U.S. presidential election, retaining their steep overnight gains, but capped by demand concerns and worries about rising supplies. Hopes that major producers would hold back from ramping up output helped lift prices in the previous session, but the market faced surging coronavirus cases, rapidly rising Libyan supplies, and uncertainty about the U.S. election outcome. Brent crude futures inched up 1 cent to $38.98 a barrel, while U.S. West Texas Intermediate crude futures were up 8 cents to $36.89 a barrel. Both benchmarks gained nearly 3% on Monday. And gold prices are down this morning as cautious investors awaited the outcome of the U.S. presidential election, with President Donald Trump closely trailing Democrat Joe Biden in national opinion polls. Spot gold fell 0.1% to $1,892 per ounce. U.S. gold futures were little changed at $1,893 per ounce. Also on investors' mind, the Federal Open Market Committee will begin its two-day meeting on Wednesday. Silver rose 0.1% to $24.07 an ounce. Platinum gained 0.2% to $860.46, and palladium was up by 1.1% at $2,235. And still talking about the precious metals, Ghana, which saw gold export revenue hit $6.2 billion last year, has been struggling to deal with the economic impact of the COVID-19 pandemic. In response to this, Africa's biggest producer of gold is set to raise $500 million from the sale of 49% of Yagba royalties on the London and Ghana stock exchanges. Let's talk about this with Maiwa Ige, one of the research analysts with Financial Derivatives Company. Hello, Maiwa. Good afternoon. Thank you for joining us.
Thank you for having me. Good afternoon.
So Ghana plans to raise about $500 million from the sale of 49% of Ayaba royalties on the London and Ghana stock exchanges. Do you think this is a good move by the Ghanaian government? What issues do you think may arise from the deal?
Okay, so at the end of 2019, Ghana ended 2019 with a debt of about 64% of its GDP. Ghana had borrowed money to in anticipation of petroleum revenue from petroleum, but then with the oil collapse, they're not able to pay back their loan interest. And all of this with the pandemic has also increased pressure on the country's finances, and this is why they have come up with this plan in order to raise money for infrastructural projects. But then the idea of debt-free money always sounds like a good idea, but then it's important to look at the terms and the conditions and the structure surrounding how this money is sourced and also how this money will be paid out. Already, there are critical issues that have been raised about this deal as it stands. There are concerns that this deal may not be a good deal, and then there's also concerns that it's not feasible to know the future royalty payment obligations, and so it may be mispriced or underpriced, even to the government and to the investors. There are also issues of transparency as to the project owners, project terms, and the fact that this deal is being incorporated in Jersey, a tax haven. There are fears that there's a risk that the government's the country rather's resources will be passed into the hands of private investors without proper scrutiny. And with all of this coming up, and there's also an unverified information that the deal will be in perpetuity till gold runs out, which is a very, very dangerous thing if you think about it. And all of these have actually led to this deal being put on hold for its corruption risk assessment to be carried out before it can continue.
Now, oil price is set to have an inverse relationship with the price of gold, with the possibility of an election deadlock in the U.S. There is a likelihood of a fall in oil prices as well as investor flight to quality as a result of uncertainty, which will push up the price of gold. What does this mean for Nigeria as a producer of gold?
So gold is considered to be a hedge against inflation and currency debasement, and it's seen a 25% increase this year alone. And with the resurgence of coronavirus cases globally, prices of gold increased, and also the uncertainty surrounding the US election also would play a part in that eventually. And so in between the resurgence of coronavirus cases, the uncertainty surrounding the US election, if it turns out into, if it ends up in a litigation or in the election deadlock, there's possibility that the prices of gold may increase even into 2021 if a vaccine isn't found on time, and also if a vaccine isn't found on time. And so with all of this, Nigeria that already has plans of increasing its or starting gold production can actually benefit from this increase in gold. But we already have a first gold reserve in Zamfara. We have the Segiola Gold project in Osun that will commence operations next year. So there's a possibility that we can actually increase our revenues to make up for the deficit we got from dropping oil prices, and also increase our foreign reserves, fund our infrastructural projects if we take advantage of the gold price, the strong performance of gold prices now. But then the issue is that we have in Zamfara, where our first gold reserve is located, we have attacks there, insecurity going on there. If this issue is not addressed, it may actually jeopardize Nigeria's plan of going into gold production and achieving its annual revenue of $500 million from it.
Now, if the elections go smoothly and the world returns to near normal with a Biden win, what would happen to global commodities, including oil, LNG, cocoa, and cashew? And also, what will be the impact on the Nigerian economy?
So, Biden winning the election, we could look at it from the demand side and from the supply side. On the supply side, Biden is known to be a supporter of renewable energy. His stance on climate change, green energy, environmental pollution is well known, and so he's already proposed to a drilling ban on federal land. And with this, we expect that U.S. shale production will drop. But at the same time, he's mentioned that he would resume diplomatic talks with Iran. And with this, it's possible that he drops the sanctions that have been placed on Iran by the Trump administration, which will see an increase in global supply from Iran. And this would affect. So U.S. reducing its production, Iran increasing its production would more or less net out each other. Then for the U.S., the investment in oil, for instance, people will not be attracted to it because of the move away from it in the U.S. And on the demand side, U.S. is the largest consumer of oil globally. With the shift to renewable energy, which will most likely not be needed, the demand for oil will drop even more over time. And so, with all of this, the benefit will be more on commodities that are components of sources of renewable energy, in terms like solar panel, for instance. You have silver is used as the key component in solar panels. You have lithium, you have cobalt that are key components in renewable energy batteries. These commodities will enjoy an increase in price and even in demand going forward.
All right.
And
all right. Yes, Mayowa. Well, we really don't have much time. Thank you very much for sharing your thoughts there, Mayowa Ige, research analyst with Financial Derivatives Company. And it's on that note that we draw the curtain on today's edition of the program. Thank you for being part of it. I'm Chimize Obi Iwagu.